May pips be upon you. I told you in my last video on gold that I was waiting for price to reach my area of concern. Well, guess what? We're here. Can I get this a little bigger? A bit more imposing? I think I can. All right. Yeah. We have reached my area of concern. We have tapped the other side of this bull flag, this descending channel, whatever you want to call it. We reached it. And I told you it was going to happen between 24 and 48 hours. And we have been on point. So to this point, such as, so far. So we now need to refine things and to have a plan of attack. All right. I want to point some things out. We have this bear flag. It's formed it well. We have 2 touches on top. We got actually 3 touches, 1, 2, and the 3rd touch on the bottom. All right. The 3rd touch is really the charm with these kind of patterns. You always look at the 3rd touches and what happens after that, if there's a 4th touch or a break after that point. But I always tend to put my antenna up on the 3rd touches of these things. All right. And we also have what I have identified as a weekly supply zone. Demand zone, excuse me. All right. Right here, that's where prices descended into. You see this? This is an impulse. And after an impulse comes a correction. All right. We'll look for an impulse, a correction, and then maybe another impulse. All right. Either it's going to correct here, or we get a little dance down here, 1, 2, 3 taps on the bottom here, and reach the edge of this demand zone, and then we bounce. And I'm thinking that's exactly what's going to happen, because we are deep into this demand zone. This is a pretty strong one, though. That's what I like about it. Before this candle left, this one here, it gave us this test of the middle of the demand zone. So one could kind of expect in the next return, the test will have to go deeper in order to catch the same amount of bounce out. All right. But that's supply demand or whatever. And depending on who taught you, you might think differently, but that's how I was taught anyway. All right. So we've gone past the 50% point. We are deep into this thing, but I think it's going to go down to here. I think it's going to come down to here. Why do I think that? Let's turn the lights out for a second and look at just the closes on the line chart. All right. What I look for on line charts is, where is the key level? The key level are identified by price testing it as resistance and then support. And the more times it does that, the stronger that level is. And we can see right here, we have a line that we could draw between these 2 points. And that is the key level that I'm going to highlight right in between these 2. This is the and right here, this is the line. This is where price is going to do its thing. All right, we're going to find some hard support here. And where is this at? We got it at 1678. Let's call it, let me see, the bottom of the channel there is, I want to be as specific with this as possible. We're right around 1680. This is a key level, folks. All right, always look for the whole numbers like 1800. All right, then the 1800s and then the 1850s. I look for the 00, the 50s, and then I look for the 20s and 80s. You can do your own research on this. You can just look at price, look at a price chart, and you'll see that price makes turns at those areas. All right, but that's a whole different kind of video, and maybe I'll do that at another time. But I'm looking at this area here, and this area here. You see wicks away here, wicks away here, wicks down here. This area is the area I'm going to be looking for. All right, for a price to start doing the funky dance over here. So now I want to come up with a plan. Let's get rid of this, that. We already know where we're at. We're in the area of concern. All right, so I'm going to the daily, see what we got on the daily. Yeah, I think you can see how price has respected this area, both as resistance and support. All right, and again, this level is 16. I got it as 1680. Let's just go with 1680. All right, right around 1680. Yeah, that'll do. Is it 1680? This is the area we're looking at. All right, around the 1680 area. Okay, and what I want to also point out is if you look at an RSI, you'll notice that we are in the oversold area if this was a stock. But for Forex, we're going to say this is an extended market, an overextended market. And when you have an overextended market, you expect a reversal. And that's what I expect right here. And I also want to show you too. Something else as a confluence. My magic trend line. Can you see this? Am I the only one? Here and then here, right in the same area. So those are my confluences, right? And when you got confluence, something probably going to happen. All right. We have a strong area, a strong key level. We have the bull flag converging down on the same area. We also have a weekly demand zone that is yet to show the rejection that I'm hoping that I'm pretty sure will come. We also have that RSI. I always use, if I'm going to use an indicator, it's always going to be as a confirmation, a secondary confirmation, never as my green light to go kind of signal. All right, but and we have this magic trend line, all converging in the same area. All right, this is what I'm looking at. So that's the bigger picture, higher time frame. If I'm going to whittle in, what I'm going to be looking for is price to start giving me signs of rejection. What am I going to be looking for? I'm going to be looking for this kind of action here, right around my key level. I want to see rejection wicks, then come down flat, maybe touch the bottom here at 1670 with a wick, a big wick, to steal all of these stop losses that are going to be building up down here. Because market makers are the only reason why they want to start to meander in the area is to build up some orders. All right, they want to trick people into taking shorts here. Oh man, did I just do that? They want to trick people into taking shorts here so they can put their stop losses here. They want to trick people into taking longs here. Oh yeah, we're getting ready to go long. It gives a big wick. Oh yeah, we're getting ready to go long. People are going to be putting stop loss there, and then they come down. They do one of these numbers. I'm sorry, I did this wrong. They go up first, take these stop losses. Then they come down, take these stop losses with a nice big wick, and then they start going up. That's the way it works. And that's what I'll be looking for down here, the price dance. But I don't think it goes past 1670. Over here, I think we're going to get a wick down here to take liquidity as it does this little dance here, and then it's going to shoot up. Okay, so get your popcorn out, get your what do you call it? Your orders in place. All right, I'm going to be looking for something like this, right around here. And I'm going to be targeting, you're going to have some trouble here. All right, because this is also a key level. All right, see how it's been used, tested here. So this will be a TP1 for sure. And then I'm going to target the other side because I want that third touch up there. All right, keep our stop losses below the 670 line. Maybe give it 30 pips to make how many pips? 180. You know, this will give us almost a sixth R trade. So that's what I'm looking at. All right, that's enough. Let's keep an eye out for this thing, and I'll talk to you soon.